Looks like something big is going to happen in the silver market. Finally, we're going to look at silver supplies and their spike to above 420 million ounces, a new all-time record high. What has the silver price done at moments of spiking silver supply? Why this spike is different from all other spikes?
Join our WhatsApp channel for real-time updates, breaking news, and expert predictions on gold, silver, and financial markets. Link in the description or pinned comment. Stay ahead of the curve. Don't miss out.
Well, we're down to the last $500 billion in the Treasury's account at the Fed. Who knows what's going to happen with that in the next coming days and weeks, because it looks like there's going to be a government shutdown because Democrats are filibustering the continuing resolution, which continues to resolutely spend all of the money that America does not have. We're going to get into the platinum to silver ratio, which continues to fall. It is now below 30, pinned below 30 for the first time since 1980. The only time platinum was ever cheaper relative to silver was during the 1980 silver spike. I don't recommend platinum as a monetary metal, but I do believe that if you want some platinum and you've got a lot of silver and you need to free some space, platinum is a good way right now to replace some of your silver to get platinum. You can get one platinum coin for 30 silver coins at any retail that sells both. And finally, we're going to look at the Comex silver supplies and their spike to above 420 million ounces, a new all-time record high. And what has the silver price done at moments of spiking silver supply in the past on Comex, and why this spike in the silver supply in Comex is different from all other spikes? Where are we in liquidity? Well, with reverse repos going nowhere, we are down to the final 500 billion in liquidity. This is the amount of money that's in the government's, the Treasury's account at the Fed. We're at $500 billion now. You can see that since Trump was inaugurated in January, it's gone from about 800 billion to now 500 billion. So there's 500 left. And since the government can't spend any more money, it doesn't look like this is going to descend much more until they pass a stopgap measure, or a continuing resolution, or whatever it's supposed to be to spend more money and cancel out all of the Doge cuts. Anyone who's surprised by this, well, should have seen it coming. Monetarily, the consequences are that no more money is going to flow into the bank system from this account until new spending is authorized, and that is going to pinch bank reserves and be a drain on liquidity, which could further damage the dollar value of stocks. Whether it spreads into gold and silver, we'll see. It is more likely to spread into silver, less likely to spread into gold, but the spending will turn back on, and when it does, everything will reverse again. The platinum to silver ratio, you can see here that this level of, it's 0.03, but that corresponds to about a 30-to-1 platinum to silver ratio, has only been beaten during the 1980 spike over here. We have broken through the 1970s resistance finally. We hit it once in late 2020, right when silver squeeze was happening. Now we've broken through it, and we're at about 29-to-1 even, and we can see that platinum has been getting cheaper and cheaper relative to silver since about 1998, since the Asian financial crisis over here, and we're at the line over here, so we'll see what happens. But it's not going to become much cheaper than this. But I do expect once there is a monetary crisis, once everyone knows to chase gold and silver, if there is none available, then platinum will be next in line to be hoarded. So I do believe that that will definitely push this ratio down as people do start to recognize platinum as a pseudo-monetary metal. And it is a pseudo-monetary metal, and it does serve monetary purposes when gold and silver are in short supply. So if you've ever wanted to collect some platinum, now would be the time. You can see here that platinum has been in a almost perfect 26-year triangle that has been narrowing since 2008. So we're getting down to the end of this triangle now, and I drew another line here just for kicks. You can see here that the lower trend line going all the way back to 1970 touches over here in 2000 and 2002 with platinum at a low, and it's actually touched here where platinum crashed in the March 2020 crash, where everything was crashing. I'm going to count that as an icicle for this triangle over here, but it's just interesting and serendipitous that it does happen to touch that trend line going all the way back from 1971. So eventually this triangle is going to break out and platinum is going to head higher, especially relative to silver. Though we'll see how much higher, I don't know. And judging by the triangle, it looks that the move is pretty close at hand. So this is the silver to S&P 500 ratio. There's a few key things that you should recognize from here, that you should notice from here. So this is the ultimate high of silver relative to stocks, and that is about 0.45. If you look at the intraday low for the NASDAQ and the intraday high for silver was about 50, and not the NASDAQ, the S&P 500 was 110. So that is a 0.45 ratio, and we're now at 0.006. So assuming we get to a 1980 high, and we will at some point in a monetary crisis, stocks should fall relative to silver by 75 times in purchasing power. So all the purchasing power will descend from stocks and go into silver especially. The other thing I wanted to point out about this chart is that the starting point for the bull market of 1976 to 1980 was a ratio of about 0.04, something like that. So the high of 2011, when silver next hit $50, right, the high relative to the S&P 500 was the starting point for the 1976 to 1980 bull market. The low point of that bull market was the high point of 2011 when silver hit $50. We're now at 0.006, and we cannot get much lower than here. So we're looking at a rise of 75 times in purchasing power for the silver holders versus the S&P 500 stock index holders. Now, if we compare this to gold, we have a high of 7.9 on this ratio. We're now at 0.5, whereas we started at 1 in 1977, and we got to 7.9. Now we'll be starting at 0.5, and we will head there eventually in a monetary crisis, and that translates to about 15.8 times. So gold will rise in purchasing power 15.8 times relative to the S&P 500 in a 1980 end game scenario. Now, if you do the math on 75 versus 15.8, you get something interesting. So here, back near 15 to 1, let's do some math. If silver gains 75 times relative to stocks and gold gains 15.8 times relative to stocks, loosely defined as the S&P 500, then silver outgains gold by 4.7468 times. That's if you take 75 divided by 15.8, you get 4.7468. That puts silver, now if you multiply the current price of silver by 4.7468, that's $159.35, $159.35 if gold stays static. So you take the static price of gold right now, which is $29.53, divide it by 159.35, and you get 18.5 gold to silver ratio. So that does mean that in that 1980 scenario, we will be heading towards a 15 to 1 ratio. I don't know if it's going to reach exactly 15 to 1 or if it's going to stop at 18.5 or 17 or 16. But the point is, once we get there, once we get a 75 times revaluation of silver relative to stocks or a 16 times revaluation of gold relative to stocks, we'll be around a 15 to 1 ratio, and you should sell your silver for anything you can buy. Now, the last thing I want to talk about is PSLV. This chart is from Gold Charts R Us. We can see here the volume in PSLV, the trading volume in PSLV has gone ballistic, vertical, crazy. We've reached a high of about 60 million shares a day over here. This over here was silver squeeze. You can understand why there was a temporary spike there, because everyone was calling on all the apes and all the silver stackers to buy whatever they could. Silver ETFs, physical silver didn't matter. And here is silver squeeze right here. But here, this is being sustained. It just keeps going higher and higher and higher. How long will it be sustained? I don't know. And also, this little jump over here, this was the March 7th, 2022 what's it called? The thing with nickel Armageddon. That's when the base metal trading platform, I forgot what it's called, in London almost crashed. But here you can see that this volume has never happened before, not in 2011, not even close to it. And now it just keeps going up and up and up. So what is going on? This is a short interest in silver, the amount of shares being traded short. And what is that number? It's hidden by my face. It's 24,882,645 shares. What the hell is going on here? Craig had asked Sprott to clarify. We don't have an answer from him yet. Here you see silver squeeze, a little spike over here, but it's nothing compared to what's going on now. Somebody's shorting a lot of